Welcome to The Explainer. Today, we're diving into what I can only describe as a strategic corporate thriller. We are looking at Banzai International. Now, they're a micro-cap marketing tech company, and they are maneuvering through some incredibly treacherous public markets right now. It's a high-stakes case study of aggressive growth, massive financial strain, and, as you'll see, a literal last-minute market rescue. Let's get right into it. To really understand Banzai's game plan here, we first have to wrap our heads around the sheer scale of the macro opportunity. The global marketing technology industry, or MarTech as it's usually called, is projected to reach a mind-boggling $2.4 trillion by 2033. It's a rapidly expanding universe, completely driven by this insatiable demand for data-driven, highly personalized marketing.
But, here is the catch. This massive market, it is incredibly messy. Right now, it's flooded with over 14,000 fragmented products. Imagine trying to cook a massive dinner in a kitchen where your oven speaks French, your fridge speaks German, and your mixer just speaks gibberish. That's basically a modern marketer's daily life. Their email software literally doesn't talk to their webinar tool, which creates an absolute nightmare of disjointed data and disconnected workflows.
Okay, so to unpack Banzai's multi-layered story today, we're going to hit 5 key areas. We'll start with the MarTech integration problem, look at their land, expand, and acquire playbook, check out their AI-powered product ecosystem, dive into the financials and restructuring, and finally, look at that dramatic Nasdaq compliance rescue.
All right, Section 1, the MarTech integration problem. Let's start with that core headache plaguing modern marketers and how it's completely shifting the way businesses buy software today.
See, for years, the absolute gold standard was building what they called a best-of-breed stack. You'd buy the absolute best individual tool for every single tiny task. But because of those exact integration nightmares we just talked about, 60% of marketers are actually abandoning that old way. They are actively pivoting toward all-in-one integrated suites where everything just naturally speaks the same language. And this is exactly the massive wave Banzai is trying to ride.
Which brings us right to Section 2, land, expand, and acquire. This is Banzai's highly aggressive playbook to build that all-in-one suite without having to code every single piece from scratch.
So the really crucial point here is their 3-beat strategy. Step 1 is land. You get customers in the door with a super low-friction, highly popular tool. Think of their webinar platform, Demio, for example. Step 2 is expand. Once the customer is already playing in your ecosystem, you organically cross-sell them more features. But Step 3 is where the real corporate engineering kicks in, acquire. Banzai is out there actively hunting for profitable, high-growth businesses to just buy up and plug directly into their platform.
And the financial engineering behind these acquisitions is honestly fascinating. It's basically value arbitrage. Look, the industry average valuation for public MarTech companies usually sits somewhere around 6.5 to 8 times their revenue. Yet Banzai is targeting acquisitions at roughly 2 times revenue. How? They do this by offering equity upside to the sellers, which heavily conserves their own cash. A really prime example of this, they recently bought a video production platform called OpenReel for $19.6 million. To put that into perspective, that same company had previously raised $27 million on its own. Banzai is literally snapping up high-value assets well below replacement costs.
Okay, moving on to Section 3, AI-powered product ecosystem. Let's look at how this M&A strategy physically manifests into an actual working software platform.
In practice, what they're building is almost like a Voltron of marketing tools. You have platforms like Demio for webinars, OpenReel for enterprise video, and Reach for targeted event marketing. And by bringing all these under one roof, Banzai creates this interconnection flywheel. So generating leads in one tool feeds directly into the audience growth engines of another.
And importantly, they aren't just kind of loosely bolting these software companies together. No, they are heavily weaving artificial intelligence throughout the entire suite to automate workflows across their, get this, 140,000 plus customers. And the numbers totally prove this is working. AI-enabled features accounted for 71% of their annual recurring revenue in Q1 of 2024. That's driving an incredibly sticky 92% customer retention rate. For you, whether you're an investor or just a business owner, this proves the ultimate SaaS golden rule. When customers rely on your AI to save them time, they simply don't leave.
Now, on to Section 4, financials, growth, and restructuring. Because obviously building a software empire through acquisitions costs real money. And that brings us to the pretty stark dual reality of Banzai's balance sheet.
So on one hand, you have explosive top-line growth. In their second quarter of 2025, total revenue jumped a massive 205% year over year.
That hit $3.3 million. And even more impressively, their annual recurring revenue, which, remember, is basically the lifeblood of any SaaS company, soared by 182% to reach $12.6 million. So the top-line engine, it is clearly roaring.
But that top-line growth comes at a pretty steep price. All those operating expenses, fueled by integrating these acquisitions, they pushed overall costs up to $7.4 million for the quarter. That widened their net loss to $7.8 million, though their adjusted EBITDA loss did remain kind of flat at $1.5 million. Still, it's your absolute classic startup dilemma, right? You've got this awesome hypergrowth, but it's fueled by some really heavy cash burn. To combat this cash burn, management had to step in and orchestrate a massive financial cleanup. And they went big. They converted $17.32 million of debt into equity, basically trading IOUs for company shares to just stop bleeding cash on interest payments. They also wrote off $5.6 million in obligations, and they made the painful, but honestly necessary choice to cut staff by 27%, reducing their annual operating costs by about $5.5 million.
Which leads us to our final act, Section 5, the Nasdaq Compliance Rescue. Because all of this high-stakes financial restructuring, it wasn't just for internal efficiency. It actually culminated in a literal fight for their survival on the public stock market.
This really builds into a high-stakes suspense story. In August 2024, Banzai got that dreaded warning from Nasdaq. They were officially out of compliance and facing delisting. But Banzai did something super clever. They used their own acquire playbook to save themselves. In January 2025, they went out and acquired Vidello for up to $7 million. Now, why does that matter? Because that move instantly boosted their stockholders' equity on paper, which allowed them to meet the strict requirements of the Nasdaq Capital Market tier.
And the wild thing is, the strategy worked perfectly. By requesting that phase down to the capital market tier and using the Vidello deal to boost their equity, the Nasdaq Hearings Department officially closed the compliance review. Just like that, Banzai secured their lifeline and avoided getting kicked off the exchange. Talk about threading the needle.
So, taking a step back, what should you take away from all this? Look, Banzai has undoubtedly proven they can architect some incredibly complex financial survival strategies and scoop up high-value assets at a massive discount. Now that the immediate financial fires are put out and that AI product flywheel is really spinning for their 140,000 customers, we're left with one absolutely critical question to ponder. Can this microcap's highly aggressive land, expand, and acquire playbook actually allow them to rise up and challenge the multi-billion-dollar MarTech giants? It's definitely going to be a fascinating journey to watch unfold. Thanks so much for joining me on this explainer today, and as always, keep questioning the data.